Hi, everyone. Thank you for joining us today for our webinar on 2017 Trends in Digital Transformation for Financial Services. My name is Michelle Palomera, and I head Tandem 7's Financial Services practice. At Tandem 7, we focus on helping our clients with their digital experience strategy, experience design, and digital enablement, and we have deep industry expertise across financial services and insurance. We will discuss 4 trends in digital that we are seeing take hold across the industry and approaches that are gaining traction. We have 2 presenters today. We're excited to have Ellen Carney from Forrester. Ellen is a principal analyst focused on digital strategy and specializes in the insurance and broader financial services industry. She has some new research coming out this month that ties directly into this topic, so watch for that. I'd also like to introduce Andrew Foley from Tandem 7. Andrew runs Tandem 7's experience strategy practice and has led major digital initiatives in the wealth management, securities, and insurance industries. As we go through the webinar, please feel free to submit your questions real time, and we'll try to address them in the Q&A at the end. And if we run out of time, we'll have either Ellen or Andrew follow up directly to address those. Thank you.
Thanks, Michelle. So as Michelle mentioned, there are a number of trends that we're watching for in 2017. In our conversation with Ellen, we will look at 4 trends that will have significant impact on digital experiences across the financial services space. For each of the 4, Ellen will give an introduction and overview with some key analytics and drivers of the trend. I will then give a sense of what specific actions our clients are taking in the field that are related to or presage the trend. First off, a description of the growing digital divide between those companies that are investing broadly and strategically in digital platforms and those that may be more focused on incremental or tactical initiatives. Ellen?
Oh, Andrew, thanks so much. A gap is emerging between the financial firms that are embracing digital business transformation and those that are continuing to do things the same old way. In 2017, this gap is going to widen significantly as leading providers experiment with new ways to win, serve, and retain their customers. What's going to be the impact of this gap? For starters, leading financial providers are going to be spending a lot more on digital business technology. 2017 will see the gap between leaders and laggards widen as more mature firms dramatically boost resources for digital business technology, or what some call foundational digital initiatives, in which a company integrates, re-engineers, or replaces back-end systems to enable future efforts to win, serve, and retain customers. Why is that? Because we are all on our way on a journey to becoming a digital business. Some brands have been born digital, such as GoBank. Others have had digital thrust on them, and have had to accommodate and change their traditional models to become digital. But what makes a business digital? Digital businesses continuously exploit the technologies that they need to create new sources of value for customers and increase the operational agility of their own firms in service of customers. And why is some of this happening? Once upon a time, technology actually favored companies like all of us here in the audience today. The balance of power was clearly shifted towards the institution. They were the ones that had the information about the risk or the cost of the asset. They were able to price that, and they had that information based on the location of the customer. Think about what's happening now thanks to handy mobile devices. They have emboldened customers. So the balance of power, the asymmetry of information has shifted from the benefit of the institution to the benefit of the customer. And as Andrew and I are going to talk a little bit about, it's the institutions want that data that the customer has. And we're going to be talking a little bit later on about how they're planning on using that. So we believe 2017 is going to see a further widening of the gap between firms that understand how empowered customers and digital technologies are changing the financial services market, and how the firms that don't get it and continually blundering along in the same old way are going to fare. Customers are going to continue to expect greater convenience, while both new and established competitors will speed up the development cycles and seek to disrupt the industry's value chain. So, our take by 2020, 47% of executives that we've surveyed expect digital to influence more than half their sales. And the experiences that we're going to be delivering through the digital channels have to be based on the outcomes that create value. So it's no longer just simply about shaping the experiences that consumers have. Those experiences have to drive an outcome that's going to shape how customers perceive the value that we're able to deliver as financial services firms. So it means we have to rethink how our businesses are going to create value for our future customers. Honestly, Andrew, we'll talk about it. It's going to be an issue of becoming digital prey or digital predator. And you're prey if you're selling products or if you're selling services. You are a predator if you're designing experiences, if you're delivering outcomes, and if you're satisfying the desires of our customers. So by 2020, every business is either going to become one or the other. Predators are going to be the kinds of companies that are going to be able to achieve digital mastery, harnessing digital to create new sources of value for their customers. And preys, they're going to continue to be digital dinosaurs, unable to evolve their proven business models until it's too late. So what that means is we have to be thinking about now, this part of 2017, how are we going to build our digital DNA? It's going to be a combination of, kind of two focuses. One is going to be about challenging the thinking of your own organization, how you're going to define, what kind of business you are, how you're going to assess your own readiness to actually tackle that shift to becoming a digital predator, and, where is that inspiration going to come from for your organization? And then it also, means that we have to think about how we're going to lead that change throughout our own organizations. From acting as a guide, from managing the strategy of the digital business to, organizing the business, becoming an agile organization, starting off with design thinking and thinking about, not waiting 2 years to actually roll something out, but actually thinking about, we can get by with a minimally viable product. And then finally, has this worked for us? We have to continue to benchmark and audit our digital business to, uncover the opportunities where we can actually further differentiate ourselves. So that's really kind of the leading change part. So, it is a big divide, Andrew, and I'd love to hear what you guys are seeing in the field.
Yeah, so this diagram is a really great way to think about sort of major organizational transformation. And certainly for the right team at the right time, it's perfect, right? That sort of staging out all the different pieces of the flow and getting to that point where you're challenging thinking. And in fact, we're seeing more conversations and initiatives around what we'd call pure digital strategy literally than ever before. So for example, we see large investment banks pursuing new retail markets, new customer segments through almost purely digital plays. And the way that they're doing that is they're pursuing sort of a nimble product by product approach as opposed to a traditional big bang approach with an end-to-end solution for retail banking, for example. However, there are lots of what we call tactical innovation approaches that can have significant impact on the organization over time. So some examples include taking an initiative that literally has to happen due to imperatives coming from risk and compliance and using it as actually an opportunity to piggyback innovation and sort of create a much more value-add customer experience for segments of user population and customer base that haven't been really spoken to before. Another example would be digitizing a valuable to customer but potentially low revenue transaction like a health club reimbursement for a health insurance company to help drive adoption and sort of ease that access to a range of other digital solutions. So Ellen, sort of next step, what are you seeing in terms of the way that digital ecosystems are likely to continue to evolve in 2017?
Oh, perfect. And Andrew, I love the characterization of, seeing other benefits from some of the investments that we're making that might be, kind of low dollar value to kind of drive us forward to 2017. Obviously what we're seeing is some really interesting things that are happening around the ecosystems that are evolving around our customer base. And I have a report coming out that actually is talking about this shift. I'm giving the example for insurance, but you could easily imagine this from a banking or a wealth management management product perspective as well. But when we think about how inefficient the business models that we have that are hard-walled, closed off from the experience that our customers are imagining, because they're bringing these experiences from their travel experiences or their retail experiences. But when you think about how we actually procure insurance right now, we might go through a broker. In the case of auto insurance or maybe something else, we might actually go direct to the insurance company. And the unfortunate thing is it's a very inefficient process. It's inefficient and there's no convenience for the customer. The idea of the broker, they may or may not have a good sense of the risk that the consumer might be exposed to. So there's no real mechanism to actually make this process easier, capture information about the customer that would be valuable to think about a new kind of outcome that we might be able to deliver to that customer. So imagine this world where we actually think about something that would cause us to disintegrate our classic vertical integration models in financial services and move to something called virtual integration. And it's going to drive certainly a radically different degree of specialization. We're no longer going to be selling products anymore, Andrew. We're going to be selling experiences. And those experiences may be around getting us to and from work, not just simply car insurance, but how do we make that transportation experience more meaningful, more valuable, more enjoyable for the customer? Likewise, we see the same thing around lifestyle. How do we live in our home? How do we travel? And finally, things like well-being, life insurance, health insurance. Those are the kind of classic kind of products that would kind of integrate into this well-being cloud ecosystem. And this would have been a little bit harder to imagine, and we could have thought about something like this where this would be orchestrated by something called a managing general agent. But thank you, Uber, thank you, Lyft, thank you, these abilities to orchestrate complex networks. Now we have the means to orchestrate all these types of solutions that would take care of our transportation, our lifestyle needs, as well as the ecosystem that surrounds it. It may not just simply be anymore, Andrew, the stuff of insurance like distribution and risk and underwriting, but there's a whole vast ecosystem of people who support that from a whole product perspective. The people who help us recover from claims, the healthcare provider who helps us in our workers' comp accident. So imagine this world where we have a digital orchestration layer that the customer is able to control, that feeds data into a huge big data repository, and also provides a connection to that changed role of the agent broker, who's going to be much more about providing advice and counsel to the consumer about their risks and their lifestyle protection needs than selling products. So a very different world of the business of insurance, and that you could actually see that kind of moving also into wealth management.
Yeah, that's so interesting, the way that ecosystems are really becoming a sort of driving paradigm, the way people see interoperating sort of business and partnership relationships. So definitely ecosystems are coming in many forms. Some of the things that we're seeing mature over the last couple of years in financial services are things like joint ventures and consortia. So especially in areas where it's sort of what we might call lower differentiation value, they're costly things, potentially like securities transaction information or securities master files. Let's get together and create sort of a distribute the infrastructure cost so that there can be sort of a shared collaboration on things that aren't really points of differentiation, points of focus. Sort of along those lines, we're also seeing that there will be distributing the infrastructure cost for blockchain in the insurance industry for settling claims. So blockchain is also, in our mind, going to continue to be an active sort of driver of evolution of new forms of ecosystems. So I think next up, the only other point I would want to put there is that the power of platforms that can be nimble and dynamic and really have sets of APIs so that you can support much more rapid reassembling of relationships and the way that you assemble that customer data and those experiences. So it puts a premium like never before on the power of the platform to truly be modern architecture, very smart in the way that design systems are utilized. So we're really seeing that's the sort of the central enabling technology component for these new types of ecosystems that are going 2017, 2018. The acceleration is truly going to be dramatic in the way the business models that we're going to start to see.
Yeah.
So next up, Ellen's going to touch on some of the other emergent things we're seeing for 2017, really around the area of predictive analytics and then the incorporation of behavioral finance and behavioral science into experience design for financial systems interfaces. Ellen?
Well, and Andrew, you bring up a great point around, the idea of modernizing our legacy infrastructure in financial services, and the companies that haven't done it yet are going to be really caught behind in terms of these new experiences that customers are going to be expecting, and this idea of being able to, atomize the experience across an ecosystem, unless we're able to do that, is going to be, at risk. And of course, what do we want to get out of those systems? We want to get data and insights about our customers. So, perfect segue into what's happening from a predictive analytics and behavioral finance perspective. The next hot job in insurance, and I'm not talking about health insurance here, Andrew, the behavioral scientist. We in insurance, when we think about, what the hot job was 5 years ago, it was a big data scientist. Well, I hate to say it, it's a little bit old school now in insurance. So as big data and analytics strategies mature, digital insurance teams we see are identifying new applications for the insights derived from these business assets. And it's not just limited to insurance. Smart digital insurance, customer intelligence, and experience teams are collaborating and using neuroscience to reshape when and how to present personalized content, functionality, and experiences to customers. And in the process, digital teams and their analytics colleagues are going to need new kinds of skills to create the kinds of personalized experiences that are going to help anticipate a need for insurance or wealth management or banking services. So let's introduce the hottest new job, behavioral scientist. And in February, the oh-so-hot peer-to-peer insurance startup Lemonade announced that it had hired the first industry Chief Behavioral Officer, Dan Ariely, at MIT. And State Farm is also, another insurer who's making plans to use behavioral data. Last year, and of course I always find looking at the patents that insurance companies file to be quite interesting, showing at least their hand about what their strategy is going to be. But they filed a patent to calculate a total impairment score. So Andrew, when you think about, getting on the road in your transportation experience cloud, we're also going to be able to think about how stressed you are and be able to use that to figure out, how we should price that, per trip car insurance that we're going to be selling you. So, not only how stressed you are, but maybe how stressed other drivers are on the road. So, a great way to think about how we're using data and analytics to price risk. So that interest in behavior is also extending beyond the individual. Consider the behavior of something we've talked about, Andrew, the household. How do we understand, what's going on in the household and how changes in its composition and relationships change the financial picture of the occupants, something we call shared finances. What would, anybody who is on our audience today, Andrew, do if they knew there was a 14-year-old in the house that's going to have to be added to the auto insurance, or if someone is, poking around a life insurance website and wondering about changing a beneficiary. So, definitely something that we're seeing from a behavioral standpoint that, gives us insights in terms of what the customer is thinking about and things that we should be thinking about in terms of that well-being cloud or that transportation cloud. So what are you seeing in the field, Andrew?
Oh, it's so amazing how quickly that type of perspective is actually, we're literally seeing it in the work that our clients are doing. So sort of in the wealth management space, a lot of our advanced clients are literally starting to think through what are the complexities in a multi-party household in terms of their perspective on investments, the philosophy they have, time frames, sort of their risk tolerance. So also sort of couple that with the enormous amount of intergenerational wealth transfer that's going to be happening, and just sort of how does a financial advisor maintain that relationship with someone who's literally thinks about investments in a completely different way and may or may not value that traditional relationship, that personal touch that used to exist. So we're really seeing the active engagement of this discipline in sort of, they're definitely transformation projects. It's not across the board. The other thing that's really interesting sort of as a design practitioner is that it's a really distinct lens from traditional user-centered design. And so I think it's very exciting for our teams to get yet another lens into the mix of things that are really driving the way that we synthesize and come up with unique user experiences.
Yeah, and it's hardly without challenges, you know. I mean, one of the interesting things is how do we, I mean, if you're a life insurer and you haven't even been able to capture an email address, how can you take advantage of some of these experiences if you can't even pull that data out of your systems? And that's not an uncommon inquiry that we get here.
Totally. And what it certainly does, it puts a lot of value on the discipline of predictive analytics, so that this is another one that's truly pervasive in the way that we're designing digital experience. So there's just a much more robust set of assumptions around what are the data capabilities under the hood to help predict what the user might want to do next, options. If they're in a purely conversational UI, often that engine under the hood is really essential to helping a user sort of get unstuck or decide what to do next. And it's a deceptively easy to imagine interface. It's literally, I typed a question, the robot typed up back an answer, but the engine under the hood, Ellen, it's a whole new game of analytics and applying that behavioral science discipline to, as you suggested, to that complex sort of traditional data analytics.
Yeah. Well, you know, and it's worth mentioning that I was going through in Progressive Insurance's investor presentation from October 6th, and one of the things they called out to their investors was the value of assets they had with recorded calls in the call center, chats, back and forth, and what they were able to do from a data perspective to, you know, from their own predictive analytics strategy, is really understand what's going on in these conversations that they're having, and the fact that they're calling this out as a business asset is quite striking.
And what we didn't talk about in depth was sort of robo-advisors and sort of the challenges that we see coming this next year, but we really see some of the innovative companies focusing on what we call a hybrid robo model. So are there clear off-ramps where the complexity, the uncertainty of what the customer needs to decide, or what they want to do next, or how to help them think about making a decision, these off-ramps to specialized human advice sort of is an essential part of really mapping out that entire customer experience journey. And so if you think about it, Ellen, what we're really seeing is the emergence of a human AI division of labor. And so the AI is going to focus on literally automating more routine tasks, yes, but it's also going to be the engine of synthesizing complex data and predictive analytics. And that's sort of that AI world over there. But then it's not strong enough by itself, Ellen. It needs to be complemented by the specialized human insight and synthesis, and I would dare to say empathy.
Yeah. No, we're in violent agreement on that point. I totally agree with you.
So our next topic is around the new sets of tools that are going to be employed to take advantage of some of these insights that we're seeing. So Ellen, give us a sense of what you're seeing.
Well, and this is exciting times, Andrew. So when it comes to truly transforming businesses, there are a variety of techniques that we're seeing digital business leaders embracing to get there. Obviously, customer obsession. That's the competitive advantage that we have right now. Think back to our information asymmetry slide, and that requires harnessing every employee, every customer data point, every policy in the organization. But unfortunately, for anyone hoping for a shortcut, unfortunately, there isn't one. So companies are going to have to assess and address 6 key operational levers in their business: their technology, their business structure, importantly, their culture. That's a hard one. The talent of people that they have, and that's kind of hard in some industries, competing for talent that's, quite dear in other industries as well. How are you going to measure it? And then our underlying business processes. And, this is, derived from, 4 principles of being customer obsessed. You're customer led, you're insights driven, you're fast, and you're connected. And all 6 of these operational levers I talked about, the tech, the structure, the, culture, they're interconnected. You can't leave one out or behind and still be obsessed, with your customers. So this is frankly, a total transformation that we're going to be, undergoing. And financial services firms are especially feeling the urgency. My colleague James McQuivey plotted where industries fell on 2 different dimensions: the criticality of being customer obsessed and how hard it was going to be to get there, moving those 6 operational levers, Andrew. And criticality, largely a measure of how susceptible your business is to disruption. And this depends on how simple it is for customers to understand the value that they're paying for. And therefore, can they be persuaded to try alternatives? And when something's a commodity, like honestly auto insurance, it's easy to do. So the explosion of fintech startups, of course, and there are thousands now, is evidence of this, this risk to, any of the firms of people are, in our audience today. That difficulty axis is quantifying the obstacles that stand in the way of customer obsession. And this includes something that, it's going to be interesting to see how it plays out, in the U.S., come, January 20th, regulation. It's a huge impediment in financial services. The other things I've talked about already: how resistant is your company culture to innovation? And of course, that's a factor that's particularly present in insurance. And of course, the operational complexity of the business. How many moving pieces are? What's the nature of your product portfolio, your process, your org structure, your ecosystem? And of course, the underlying core systems, the IT stuff that supports it all. And how are they all going to proliferate and introduce greater costs as they do so? So, as I say, up in the upper right-hand quadrant here, susceptible to disruption, telecommunications and financial services. Interestingly, the connection between the 2 here. And we actually see some interesting possibilities of telecom kind of moving into the business of insurance. So, obviously, incumbents, could be disintermediated. The risk if we don't deliver and address the complexity of our back office systems on the front office experiences we're trying to deliver, we're going to be disintermediated right out of the picture. So think back to our insurance example, our virtual integration example that I had talked about, where there's a single orchestration layer that manages all this complexity on behalf of the customer. I talked a little bit about, now we have an orchestration mechanism, Uber, that can actually rally those resources, those cars or those tow trucks. Think about how digital has enabled social financial services such as peer-to-peer insurance. I've already talked about Lemonade or peer-to-peer lending. So there's all kinds of new players who are capturing the hearts and minds of consumers through these delightful digital experiences and are leaving out the banks, the payment networks, the insurers. So we do have a risk. If we don't keep up, what do we become? We're disintermediated out of the picture. We become invisible or, ingredient brands. And, there are companies, Andrew, like Intel and BASF who've made hay with that, a lot more than haven't. So, there's, this is a negative outcome. Here's a positive outcome, though. Others, could develop a kind of specialization that drives customer loyalty and fends off the competitors for a while. It's amazing how fast, innovation actually gets replicated through the industry. You might be innovative for a month, 2 months, or 3 months. It's quite hard to maintain that advantage. And to make all of this stuff work, there are technology implications of this customer-obsessed world. This is no longer technology for technology's sake. Phenomena. I think Michelle, you and I talked a little bit about the technology bacchanalia. Let's just spend some more money on technology, and hopefully some of it will work. But putting lipstick on that tech stack pig isn't going to work anymore. The outcome of tech spending actually has to create a means to engage with the customer throughout their life cycle and capture the insights that are going to continue to drive that customer engagement. So we really have to modernize this tech stack that I'm showing here that follows the customer throughout their entire life cycle with us, create the kind of APIs that are going to enable this virtually integrated ecosystem model. And we have to make sure that our data associated with that customer, believe it or not, has got to be portable for them. So what are you thinking, Andrew? Oh, I'm sorry. Missed my. So customer experience is obviously driving revenue growth here, and what we also know is that customer experience drives customer loyalty, specifically retention loyalty, which means that your customers are more likely to stay with you. Enrichment loyalty, which means they're going to buy more stuff from you. And advocacy loyalty, which means that your customers are going to be more likely to recommend you to friends and family. And we know this through, at Forrester, through rigorous surveys that we conduct. It's, basically fundamental math. We also know that in the real world, all these kinds of loyalty drivers, push revenue in various ways. And of course, everybody in our audience is business people. We kind of don't need to explain that. But I talked a little bit about the cultural problems, within financial services, Andrew, and, there's a lot of non-believers. These resistors that we kind of talked about in that urgency matrix. And of course, some of them are going to go through their, stages of grief cycle as well. But it also means that they have to think like a disruptor. They have to adopt the disruptor's mindset, and they have to focus on how are they going to best meet unmet customers' needs, how are they going to discover that. What kind of new business models might they experiment? We've given some ideas about some of these already. They have to think like, the fact that, I'm only one, part of an ecosystem of value that's getting delivered to that customer. What's my role going to be, and how am I going to interact with the other actors in this ecosystem? And, at the pace of change right now, we are living in, nanosecond time frames is like the real deal in this industry right now. So it's all about, choosing speed over crafting for the most perfect product at this point in time. So now it's time for your observations from the field. I was so enthusiastic.
There's just so much going on there, Ellen. It's hard not to be enthusiastic about the way that these themes sort of come together and reinforce each other. You talked a lot about the importance of focus and sort of not trying to boil the ocean of sort of reinventing your business model onto a digital platform. That old business model may be very brittle, Ellen. You may need to rethink the whole structure of it and where you can add differentiated value to that customer experience and really build the relationship from there. And it often, from what we're seeing in the projects that really succeed, they're all about focus and discipline, absolutely coupled with speed and not being afraid to get it out quickly and iterate, and then all the while really dependent on the most nimble, powerful platform that you can possibly invest in. So across all those four areas that really are essential to that disruptor mindset and sort of the change that go along with that in the organization that's so essential, we're seeing very practical ways that our clients are getting going. So they're really taking journey maps, the associated analytics, the creation of personas very seriously, adopting them like never before. They're also really focusing on not just sort of onesie-twosie innovation romances with the IDEOs of the world, but they're actually bringing it in and institutionalizing innovation inside, bringing their customers in and sort of taking ownership of that ideation and conceptualization of product ideas in an incubation model. And so the other thing that we're really seeing is the enduring value of platform level thinking, migrating that whole tech stack that you were talking about earlier, and investing at every place in that stack, Ellen. It's not just lipstick on the pig. It's not good enough. It's not going to give you the performance and flexibility that you need to participate in that digital ecosystem. Also, the design systems are essential so that you can actually rapidly deploy into new channels and devices. All of this, when everybody's sort of now taking Agile really seriously. It's not just a cool buzzword anymore, but there really is a discipline that goes along with it in terms of what you're going to get in terms of requirements. That experience you have to be able to accept that it's going to unfold over time. And finally, just a plug for DevOps, which is certainly an essential part of the magic of getting experiences out the door quickly. That deployment, we've seen it go from 6 months to a number of weeks for global deployments, Ellen. Yeah. So let's take a look. Let's take a sort of a zoom in on what's happening with customer journey maps.
Yeah. Oh, that's a great one. And, one of the things also, Andrew, I have to say that's striking is how the language has changed within financial services firms. It's, you used to be able to, automatically kind of slate where someone was based on the lingo and the jargon that they used. But, what's striking, I think, in financial services right now is how, there is a common language around digital, around ecosystems, around customer journey maps, around customer experience, and it's very hard to tell the difference of who actually has a job in the IT organization versus who's in customer experience now. So it's the lines are very blurry between roles, and I think in many senses that's a good thing, in terms of kind of moving this forward. There's a shared vision. So pioneering firms, what are we seeing? Financial services executives are certainly starting to redesign complex journeys like mortgage applications and insurance claims. And, here's a great example, that Tandem 7 designed around the emotional landscape of a car accident. Really, what is, what are that whole 7 stages of grief that we might see around that, insurance claims experience. But it's clear that the complexity of processes like a claim and the legacy systems that support them, oftentimes mean that they've been untouched for decades in many companies. Andrew, you talked a little bit about, what blockchain is going to be able to do here, but, part of the problem also with my hard-walled insurance companies between auto and that sort of thing is we have hard-wall systems, and it makes it very hard to share that kind of information and certainly pull out what we need from an analytics perspective. So, in 2017, we see leading firms are going to be employing rigorous and customer-obsessed approaches like future state journey mapping, so they can, experiment, learn, and iterate to make customers' lives better. Customer journey mapping is going to start to be widely adopted in financial services. Much like we've seen agile development has become commonplace in the industry over the past 3 to 5 years. And, obviously what it also means is that we have to think about, what's crucial. And that's the aim of the customer journey mapping initiatives, is that it's not only there to improve the customer interfaces, but it's also there to redesign processes and systems that lie behind those interfaces, those hard wall things that we had talked about, which makes it difficult, to pull out what we need to deliver that great experience. So, it's kind of shifting, from, looking, from outside, from your own organization to seeing what's happening in the market writ large. So, definitely some very big changes what's happening from a journey mapping perspective. And I'm sure you've seen a lot of this in the field, Andrew, as well.
It's just such a great field right now, journey mapping, Alan. We're almost seeing the move to what I would call journey mapping 2.0, which is, as you can see here, we're literally there's not just that sort of classic mapping the life cycle, the example you showed of the emotional journey, the heat map. So we're sort of seeing much more nuance and sophistication in the way in which the sort of the mechanism and the methodology of the journey map is being applied to the specific business problem. So we're also seeing literally that sort of going along with that, absolutely the trends that you're talking about, sort of financial services a little late to the party, but now truly embracing it. Obviously was initially really driven by much more classic customer-facing industries where sort of the resistance to it was sort of organically less. But what's really interesting is these big players are starting to really see that there's a need to normalize and capture the data gathered in the journey mapping, so it's not just a one and done, Ellen, that it'll sit on a shelf. It was great then, and then where were those great ideas 6 months, 9 months, next year from now? Is there a way to sort of capture and institutionalize that set of knowledge of personas, the specifics of the journey, the understanding of the customer segmentation, so that then there can be this much more dynamic and programmatic focus on the customer obsession that you're talking about. It really does take a 2.0 level investment in the way that you're going to start to think of that as an asset.
Yeah. So what does it mean, Andrew? I mean, how does that change how frequently we should think about doing customer journey maps? What should be the triggers that say we need to take a look at this again?
It's a great question, and there's not just a mechanical answer. Obviously, you want to be refreshing it often because sort of customer needs are dynamically changing. But what we're really seeing is that when there's a new product initiative, when there's a new market segment that really needs to be understood, that is a fantastic time to really take a look at a journey mapping opportunity. And then again, can you leverage assets you've already invested in and make sort of the jump out of the gate a little faster, and over time you're going to accrete a much richer understanding. But the answer to your question is it's always a good time to do customer journey mapping.
And I just have one last question for you, Andrew, about
yeah.
journey mapping. Are you seeing clients looking at the whole ecosystem in the journey mapping process? Are they not quite there yet on a kind of an ecosystem view of the journey map?
Yeah, it's a really good question. I think a lot of it depends on the sponsorship. So if you're getting access sort of higher up the executive chain with that vision around customer obsession being institutionalized, what you're going to see is there's much more of a willingness to look broadly across the set of experiences across a broader life cycle. If you are very tactically focused, often on a specific product in a specific market segment, specific opportunity, it does tend to put the blinders on a little bit and focus in on a more tactical journey. But again, if we can sort of show the value of that, even if it's tactical and incremental, gain some traction, and then move that conversation up into being more strategic and sort of multifaceted understanding of your customer behaviors and the complexity of the segmentation, then that's really the home run we're looking for.
Oh, that's wonderful. All right, super. Thank you for answering this.
Okay, so I think we've seen, just sort of in conclusion, 2017 is just going to be a fantastic year, Alan. Lots of challenges, lots of complexity, but for those who are nimble and really ready to think about these trends and adopt some of the tools and techniques, it really can be a fantastic year. And so we've sort of highlighted a lot of the ways that we can get going. We've talked a lot about journey mapping and just the importance of truly internalizing innovation thinking and disruptor thinking and bringing that in-house so that it's a core competency. It's essential to success in sort of that digital landscape and the ecosystems that we're talking about. So I know that there are several questions that have come through as we were presenting. Michelle?
Sure, and I encourage keep the questions coming in. We can cover a few of these. Andrew, why don't you take this first question? Who typically sponsors these disruptor programs? You talked a little bit about journey mapping, but what about programs looking at new business models and disruption? Where are you seeing those sit in an organization?
So great. So we're really seeing that be sponsored from three major parts of the organization. So there's sort of the product management ownership, or maybe it's sort of an LOB level ownership of the digital product. So they're going to see the immediate impact and value of a disruption mindset and the associated tools and techniques that go along with that. Also, what we're seeing is really interesting, Michelle and Ellen, is there's sort of this new and sort of emerging digital organization that often owns the whole sort of life cycle of that experience, from marketing, sales, all the way through operations and even sort of the entire P&L. And it's a truly digitally enabled organization that has the breadth of scope. Boy, do they understand the power of disruptor. And then that third one is really what I was speaking about a little earlier, are those teams that are incubated inside that are very focused on innovation, and they can be design-centric teams, and they can be emerging technology innovation teams, and sometimes they're a hybrid of both. So those are really the three main areas where we're seeing that sponsorship of disruptor.
Thanks, Andrew. Next question, Ellen. Who do you see owning that digital orchestration layer you described, specifically in insurance companies? Because we're seeing a lot more digital initiatives being sponsored by those firms. Does it differ in banks or asset or wealth management firms?
Well, it's interesting. There's a reason why a lot of companies are attracted to the business of insurance. It's the same reason that Warren Buffett loves it as well. It's like, who doesn't love the revenue model? Collect lots of money and then you only have to pay it out for claims. So there's a lot of interest in the insurance industry right now. And some of that is being driven by smart, again, this idea of well-being, lifestyle, transportation, smart home, and connected cars. So you're seeing, a lot of non-traditional companies kind of moving into this insurance or insurance-like market. Think about your power company, retail petroleum. Think about how this changes the whole idea of the gas station. This is not where we're going to get fuel. This is where we're going to download and upload data. So you could imagine this digital orchestration layer being, a platform like my colleague Julie Osk speaks a lot about. This could be who knows? This could be Snapchat. Who knows? This could be the phone company. So, obviously someone who is, clearly involved in connecting. So, there's kind of this natural sense it could be the phone company. And we're already seeing, Andrew and Michelle, insurance companies becoming phone companies themselves, mobile virtual network operators. Allianz in Germany has done that as well. So, it could be Amazon, it could be Facebook, it could be Google, it could be, someone we haven't even thought about. It could be Uber. But, it could be someone very interesting. And, as far as banking, it could very much be some of those same players, because when you think about this idea of well-being, it's financial well-being, and that's your banking stuff too. So, stay tuned. We're ready for some really interesting times in financial services.
Great. There is one question that just came in, Ellen. It's a little bit tied to sort of what you were talking about. When will we see a security exchange that utilizes blockchain? Any predictions on that?
Oh, that's really interesting. There is a company already right now called Extraordinary Re, which is really a trading marketplace for reinsurance or insurance. It's basically the securitization of insurance risk. So, again, a digital mechanism to trade risk in the insurance business. So, as fast as we can think of these ideas, the companies are coming out already. And, they're hardly alone. There's another company, RiskMatch, doing the same sort of thing for commercial insurance. But crazy times. As fast as you can think of it, it's getting created.
Great. Another question for you, Andrew. Have you heard of any type of journey mapping that's been done for specifically governance or regulation? So with sort of that compliance lens. This is obviously a big impediment for insurance companies as they look at digital transformation.
Yeah, and that's exactly the sort of ignored experience that's ripe for innovation, right? Classically, why are we going to burn cycles doing recreating that experience? It has to be done. It's a compliance imperative. But what we are seeing is it is a little nascent right now. Quite frankly, we have participated in some efforts on it. But definitely what we are seeing is there is transformation because of adoption of much more nimble ideation and concepting. And what's really great is we've seen a couple projects where they've sort of really upended the traditional go-to-market with their customers. So instead of waiting for a beta release to get their toes wet with their customer, why not bring that exposure up to week 3 or 4 of conception and ideation? And boy, do you hook your customers when as long as they understand sort of what the digital experience is and what it isn't, then it's a really fantastic way to accelerate that dialogue and make sure that all that downstream investment in detailed design and technology and components and all that stuff is on point for what the customer really wanted in the first place, or what's valuable to them. So that's a dramatic innovation in the way that product is conceptualized and then developed, and that certainly has a journey mapping element to it.
Yeah.
Great. Thank you, Andrew. And maybe a final question. This has been really, really interesting, and we have a couple minutes left. Final question for you, Ellen, since we're at the end here. We've spent a lot of the discussion today on the financial services firm, but are there any predictions for the financial advisor or insurance agent for 2017?
Oh, you bet. I've got a good one. And again, this would be the same thing for the financial advisor and the agent. When you imagine this, think about our hard-walled example of the insurance ecosystem, and we work through the broker. Digital is important. There is obviously this sense of, agents and advisors are rolling out their own mobile apps. They're competing with insurance carriers and the wealth management firms that they're representing. Imagine the role of the agent or the advisor being like the Genius Bar in the Apple Store. So 2017, think about the role of the agent in helping, that new customer or that existing customer understand all the cool digital things that carrier has invested, or that wealth management firm or that bank has invested, to help the customer, manage their risk, or, manage their money, or whatever it happens to be. So, it's also a really cool way to think about how we're going to attract new young people into the kind of old stodgy world of insurance. If you can have something really cool in an agent's office where you're getting to play with cool toys to show, insurance customers how they, can use these assets, it's Genius Bar in the Apple Store coming to your insurance agency near you.
That's great. Very thought-provoking. All right. Well, thank you all for joining us today. I think that wraps up our webinar. Just a reminder that there were some additional questions. We're going to try to attempt to follow up and address those directly. And feel free, there's a few minutes left. You can continue to submit those. But thank you for joining. And this concludes the webinar.